following is a technical analysis on Bitcoin, coverage in 240-minute interval, in which I will additionally zoom out on the daily and within the weekly. I had mentioned in the community notes a possible potential catalyst, and it would be a political move for the Democrats to begin honing in on manipulating and crashing the spot price of Bitcoin. And here we had a breakdown sell signal where we slightly consolidated and backtested amongst this primary reactionary uptrend line based upon the beginning of July, major reactionary lows there. And that was a pivotal juncture where we additionally backtested, never looked back, put in a nice clean sell signal on a solid break below the 618 fibs retracement. And we have been stair-stepping lower, backtested, especially if you're an active and or day trader, off the 786 fibs retracement, call it the 63,695 level. And that was backtested immediately. That was good for a 2% pop to the upside. Ended up getting rejected right off that day, where then it was violently sold into, backtested off the 200 moving average. And it was a nice reversing candle there. And we had a nice clean breakout right back, whipsaw reaction right above the 786 fibs retracement. And here we are, stair stepping lower. This is 618 fibs as the new resistance level in correlation of the 50 240-minute interval, a dual, call it dual price resistance level for any add-ons and or objective entry shorts for any early entry pivot points. A little bit shy before scaling in there at the 618 fibs retracement. So far has been rejected pretty impulsively here. I believe this could be the beginning stages of a downtrend, a potential move lower to backtest, retest the 240-minute interval, and then big support level at the 61,000 level in correlation of multiple price levels and intervals on the outer layers of the weekly and or monthly interval. And that will be the biggest test in correlation of the 1 fibs retracement, called the 60,000 level, 60,800-ish level. And that will be a ultimate key deflection point for long traders and or bull traders to defend, especially if we start to flush straight into it. I would put the increased odds of a nice clean bounce to the upside. How big that bounce is going to be needs to be determined by the risk reward ratio unit that you tend to utilize on that pivot point. Whereas short sellers want to see a solid big break below that level, honing in on to usher in a potential level right around the 59,381 level. You could see some minimal reaction there before a bounce. But again, the risk reward ratio still remains highly skewed to the downside, taking you out to the outer layers of the daily interval, and we are testing the 100 exponential moving average, and that has been one of the more key moving average deflection point and or transitioning point for Bitcoin in quite some time, dating back since 2020 era. And each and every time you had a breakout, you had a potential trend change. We popped that level right after the COVID drop, consolidated briefly, backtested it, came back and backtested it a few more times here, and it was off to the races. Complete upside, backtested once again, and we broke down. That was a sell signal, backtest off the 100 exponential moving average, and that was good for a more than a bigger double-digit crash to the downside. Only for long traders to step in off a nice, clean, bullish falling wedge pattern. Backtested the 100 exponential moving average once again after breaking out of it, and that had been once again a key pivotal inflection point. Broke down here, once again broke out of it. That was a good stretch for a long-side entry. Broke down, there was your sell signal. An additional backtested it once again, came shy of hitting it. That was your additional great short trade setup. Backtested it once again. You can see the picture, just an amazing structure of reaction across the entire sphere there. And that has been a very telling point for any long traders and or short sellers. I believe on a solid breakdown below, the 100 exponential moving average could usher in a secondary sell signal from the first one we called off the 4-hour chart here. And that would be a longer term potential trend change with now major duo price resistance up above in correlation of the 64,130 level, including the 100 exponential moving average there. That would be a big line in the sand for short sellers to take out, coming off a nice clean doji star setup and followed by a 3 black crow bearish continuation pattern. Make no mistake about it, the odds are heavily skewed that the negative and bearish divergences have only continued to construct and establish on multiple key indicators here, on all 4 of them. And they have, these divergences have only grown on a much, much larger scale here, only increasing the odds of a much larger drop to come. You have confirmed moving average convergence bearish crossover here, and we are testing its zero line momentum indicator threshold, and that will be a key telling point, especially if we undercut the 100 exponential dual price support level. You make no mistake about it, the momentum indicators will begin to crash below the zero line threshold, only increasing the damage within the momentum indicators on a much longer time frame. Zooming out to the weekly, and this has been the biggest pivot point, one of, if not a near decade price support level off the 2013 Mt. Gox 2014 crash lows there. And this has been a very significant telling point each and every time. Came shy to hitting it during the COVID crash, but once again, this has been a very big price support level called a multi-decade primary reactionary low up trend line, and again cuts right through the 2002 fastest interest rate hike velocity that we have ever seen in U.S. history, and that was bid heavily right off that low. And here it was, off that crash, off the 2022 bear market, back tested off of that once again here in 2023 in September, and bulls bid it up heavily to the upside. And here we are back testing and remaining within this trading range, which is only building energy with huge consolidation. I would expect to move down to the 56,000 level to retest, potentially retest those reactionary lows there, where long traders would need to hold that key inflection point as well, in correlation of the 786 fibs retracement called the 57,396 price level. And that is a big historical you had major reactionary highs all over across that entire sphere there. And that dates back since 2021. So if we go on a longer term basis to undercut this level in correlation of the 50 weekly moving average, I would expect a much larger increase in odds that a potential move down to the 618 fibs retracement, call it 48,403, would present a long trade setup, big opportunity for the long side and or any highly leveraged traders, short sellers, bear traders. They want to see a solid weekly candle close, big breakdown sell signal. And I would only, which in my opinion would only increase the odds of a potential bear market, more than 20% technical crash, full decade trend line, only creating a potential opportunity on a revisit of a monthly price resistance gap level that would also initialize potential trading range that has a very vast amount of beta in either direction, only creating a major opportunity, in my opinion, for the dollar cost average effect for the long term, especially if you're a believer in the long-term cryptography mechanisms that could potentially disrupt the entire ecosystem of the economy.